good. Let me just go ahead and put in a few of the numbers in, so then we're all on the same page. Okay. Yes, we got the private payroll numbers that came in at about 104,000. It was expected at 76. Let me just get the mic. Think it should be good now. Yeah, so the number came in at about what was it at? 104,000 instead of 76 was what we were expecting. Now that number's come in, and we're kind of looking to see if ADP does have, it usually has like a reverse to what the other markets are doing. So like if you have non-farm payroll that comes in, non-farm payroll usually comes in at about higher than ADP. So it looks like maybe you might get a higher number than 104,000 for the non-farm payrolls when they come out. So that's going to be an additional bellwether when that comes in for the economy. So that necessarily could be a bullish move. Let's see. So markets haven't reacted that much. So let's look at that. That's not really done that well. It's looking likely that the open is going to be in the green. Still have seen decent numbers come in, and ADP US July goods producing jobs, they rise about 31,000. So that's actually a higher number than what the market was expecting. So the dollar index actually picked up, and you are seeing that actually go in for the first time in quite a while. In about the past 4 weeks, you have seen the US dollar now going in at about 99, and that's happening for the first time. This is Donald Trump tweeting right now saying, remember, while India is our friend, we have over the years done relatively little business with them because their tariffs are far too high. India will therefore be paying a tariff of 25% plus a penalty for the above starting on August 1st. Again, that's actually going to hurt the INR, the Indian rupee. Now that's going to actually take it down. Now that might actually have an effect. Remember, I was saying this before as well. This is the first time you're actually seeing a penalty on a country for actually coming up with a tariff, right? Because the tariffs were higher before. Now they're putting in a penalty, which means India actually has the worst deal. Not only do they get a 25% tariff, but they're also getting a penalty now. They don't really do that much as an economy in terms of goods, but we do a lot of services between India and the US. So you are going to see that actually play out, right? Now the dollar index has hit 99 for the first time. It's taken quite a while for that to happen. The last time we were even there was when we went up there and then just came down crumbling. That was around, let me actually see when that was. That was around 23rd June when we saw those numbers. So we are getting a few data points today. We are going to be getting Microsoft and Meta of their results post market open. We're going to start seeing that come through. So that's actually going to give us a big boost on trying to figure out how that's working out. This was more of an update as a video, so I'm not doing this live. Juveria says hi, how's it going? Okay, make sure you guys subscribe and make sure you guys also go in and vote. There is a question that you should be seeing there, so make sure you guys are doing that part of it. We'll go over a few earnings that came out. One of the fascinating things that I did see was with a company called SoFi. Now SoFi had their earnings, stock was up 16% at one point of time, and then closed up 6% yesterday, and it closed at around $21-22. But at the same time, their CEO Anthony Noto came out and basically said that, hey, you know what, I'm going to do a private offering to Goldman Sachs, and that's going to be priced at $20.80 or something, and that caused the stock to actually drop another 7 to 8%. So as of what I was looking at, yeah, 7.41% lower. All the gains that you were actually seeing on SoFi, they're pretty much wiped out. So not a good sign when a CEO comes in and does that. It's just diluting more equity. So that's actually not working out pretty well for the company. But let's see how that plays out. I'm not really certain about how SoFi is going to do if you keep getting these form of dilutions, right? I think we also have data coming in for the GDP numbers at 4:30. So that's in about 9 minutes, 7 to 8 minutes to go. We should be seeing the numbers come in for the advanced GDP in the US. Now that is being expected at 2.5%. Let's see if the previous number, which was negative 0.5 previously, if that gets revised. So let's see if that happens. But at this moment, you are going to be seeing a number for the GDP coming in at 2.5. So 2.5, obviously on the positive. Remember, previously we were at the negative for 2 point for the GDP numbers. Now you're looking at a positive 2.5 print. So let's actually see how that comes in. We can stay online for that as well. I don't want to keep this too long because most likely I am going to come in for the FOMC, and we can then have a live on the FOMC talking about exactly what is currently going on while the FOMC is in play. Not a lot of move on the index. Again, the index is actually not supposedly moving that much, is because these numbers were expected to be that way. We were still expecting 74,000 on the ADP numbers, and the ADP numbers have seemed to reduce their effect on having an effect on the market, purely because of this fact that ADP numbers have been coming out almost 50 to 70,000 of a difference in jobs between the ADP and the non-farm payroll. So usually the one that's more important is the non-farm payroll. At the moment, non-farm payroll is coming out on this Friday. So we have a packed week. You're going to get the Fed come in today during market hours. You're then going to get the press conference coming in today. You're going to get Microsoft and Meta coming in tonight, which is after close. So about 4 o'clock Eastern Standard Time, you should get Microsoft and Meta coming in today. Tomorrow, we're going to be getting Amazon, Apple, and all of that during the week. And you're going to start seeing Meta's earnings today might be the most important, but anyways, we got that. And on Friday, we got the non-farm payroll coming in as well. So that's additionally going to be added fuel to try figuring out how the economy is doing, how the advertising space is doing, are consumers spending, and more or less we're also going to be getting the GDP number that comes in today at pretty much in the next 6 minutes. So in about 6 minutes, we should be able to figure out and see how the GDP numbers are going to be. At the moment, the GDP number is expected to be at 5.52. Hello, hello. And let's actually see if that number comes in. The number that's actually going to be important today is going to be Meta. You will need to see the digital advertising space, especially advertising. Remember, Meta's money is made through advertising on Facebook, Instagram, and everything else. So a lot of the money that's coming in there needs to be justified. Secondly, Zuckerberg has also been poaching a lot of the researchers from Apple. 4 of them from Apple have now shifted from Apple and moved to Meta. A few of them have moved from OpenAI to Meta. Now that is hundreds of millions of dollars that he's paying per year over and above the scale buyout of 15 billion that he's already done. So you're seeing multiple of these transactions happening. He needs to be able to justify that on the earnings call when they ask him, saying, you're paying such big salaries. Are you, one, going to continue to do so? And two, are you expecting a revenue to come out of these AI models? Now, they are thinking of creating the Meta super intelligence team. Obviously, it's going to be a great team because you already have the best of all of these places coming in. Now, are you going to be able to put all of that together and see whether this plays out or no? That is going to decide if Meta's post-market reaction, post-earning reaction is going to be in the positive or the negative. Remember, a lot of it does not have to do with the earnings that are coming out. A lot of it has to do with the guidance that these companies come out with. Are they going to be able to guide higher And are they going to be able to recognize some form of revenue? I don't expect the numbers to be bad, because remember, Google's Alphabet numbers already came out, and those numbers were way better. So you are seeing that number play out. Google's numbers that came out, you did see YouTube revenues pick up. So they were expected to be picking up at about 9%. They came in at a positive 13%. So between 12 to 13%. So if they were able to beat, especially YouTube, obviously YouTube had more screen time compared to Netflix and all the others within the Nielsen data that came out. So you would have seen advertising pick up there. But what's important to figure out is, are we going to be seeing this kind of a move in Meta as well? So if Meta's advertising numbers start having a push, there's more for Meta to actually showcase in terms of net income. And the market's not looking at this moment to figure out, are they making more money through advertising? They're trying to figure out, if you're going to be paying $100 million, $200 million, $300 million. In one of the cases, they were looking at the ex OpenAI COO Meera Murthy's startup to pick up somebody from there for $1 billion deal. They actually tried speaking to 12 people from there. That's the tweet that I read about today. And none of them accepted. So that's actually different to the scenario that's currently going on, which is based on OpenAI and Apple researchers leaving and joining Meta into the super intelligence team. So some form of justification is what you're going to need from Zuck to, and I'm pretty sure he's going to be able to do that, because he doesn't need to say he's going to be making a few $1 billion on it or tens of billions of dollars. He just needs to let us know that the guidance is there, that someday the money will be made, and that's about it. And if he will continue making these investments to be buying out $100-200 million research hires, and most likely that is going to continue. So he's not going to be able to turn around and say, hey, I've been hiring these people for 200 million and I don't know if it will work out or not. It's not going to happen. I mean, logically it is going to happen. So that works. As of the news that's currently going on, you should be seeing the news that's currently being said about the 25% tariff plus a penalty, purely because there is a massive trade deficit with India. And the other reason being that they had the most strenuous and obnoxious non-monetary trade barriers of any country. So they have always bought a vast majority of their military equipment from Russia, and Russia's largest buyer of energy, along with China, at a time when everyone wants Russia to stop the killing in Ukraine. So hence, Donald Trump tweets out saying India will therefore be paying a tariff of 25% plus a penalty for the above. So the penalty for the above is usually because of the Russia oil purchases as well as military equipment purchases. So let's see if that gets negotiated. Remember, all of this could just be negotiating tactics. You could have this all turned around in literally 24 hours, and everything could change. So nobody knows what's going to happen with that. In exactly, I guess, 45 seconds, we should be getting the GDP numbers. If the GDP numbers do come in at the 2.5, 2.7%, which I do believe it is going to be around that number, the market can rally. Or actually, you know what? The market has, in a way, discounted a lot of the good news. So no reason for it to actually keep rallying this way. What looks more likely is the fact that the market to some extent will, there's more room for it to move on the downside if we have bad earnings or bad economic data. If you have bad economic data or bad earnings, the market can actually start forming a reason to actually head lower. Now, that is something that you must keep in mind, because remember, with all of this retail mania, with all of this retail stuff that's currently been going on, the move higher has happened even on bad news, even on good news. You've seen this move higher happen. People have been buying the dip and it's just been continuously going higher. Anyways, let me just get the GDP data. 2.5 is what it's expected at, as soon as 3% for the advanced GDP. So you have seen the GDP number actually pick up. So that's actually a good sign, because that's what that means is there is a larger amount of play in this. If Powell cuts rates, we might fly. I don't really think he's going to cut rates this time. I believe he's going to actually be dovish in the statement. He is going to start telling that he is looking forward to cutting rates because the economy is looking stronger. Now, you did get a 3% GDP. And the price index on the GDP for a change actually was at expected at 2.2, but it came in at 2%. So that's a change that you're seeing. Anyway, so point necessarily being advanced GDP has picked up by 0.5 percentage points of what was expected. The US economy has grown at about 3% in Q2. It's better than expected, even though you had Trump tariffs. So in a way, that's bullish for equity markets. Remember, a lot of this is priced in, even though this is a larger than normal surprise. So even though the fact that you're seeing 0.5% jump from the expectation, a large part of this has been priced into today's all-time highs. What is not priced into today's all-time highs is a number that comes out tomorrow or on Friday of a non-farm payroll, which is either a negative number or a 50K or a 70K number. Now that'll spook the markets, or an inflation number that picks up because of tariffs. If that seems to happen, then that would have an effect that would actually be worse. Now, does that happen? Does that not happen? Time will tell. But we will go live at that time. So make sure you guys subscribe and make sure you go in and vote also. You should see the vote there on what you believe the markets would do this week. Again, Fed, Microsoft, Meta, Apple, Amazon, everybody's going to be coming in. So I don't want to keep this for too long about the current scenario in the market. Let's keep a watch. Let's see. You are seeing second quarter GDP actually come in way better than what people are expecting. Let's actually wait and see what happens with Microsoft and Meta. And let's see what the federal funds rate, whether it stays steady, whether there is a cut. Let's also look at the second thing of the FOMC statement. We should be having that in about 5.5 hours from now. So as soon as we get that, most likely I will be live as well. So you guys can come in and ask your questions then. This was just a short live that I wanted to do to talk about all of the stuff that's currently going on with the data that's coming in. So to recap for everyone that's new, we got a non-farm employment change of, this is the ADP number, not the non-farm payroll. This is just the employment change. The expectations was of 77,000 jobs. We got in at 104. You are looking at the advanced GDP that was expected at 2.5%, while the US economy grew at 3%. So that's a jump of 0.5% more. Anyways, so let's connect again during the federal funds meeting, the FOMC meeting. Let's see what Jerome Powell has to say, and then we can work on a breakdown there. Anyways, thanks for everyone joining in. We should be going live tomorrow and day after again. Those will be longer lives. We will be breaking down Microsoft and Meta tomorrow. We'll also be breaking down the FOMC meeting. The day after that, we'll be breaking down Amazon, Apple, and we'll get to know a lot about the digital advertising market. We'll get to know about the normal advertising market when it comes to Microsoft, when it comes to the cloud market with Microsoft and Amazon. We'll also get to know whether prices are going to be increasing with Amazon. They have said that they're not looking at increasing prices, but Procter and Gamble and everybody have been hinting at increasing prices. So let's see how that works out. That should be fun. We'll be able to get to know. Just in other important news, have a look at the Indian stock markets and the Indian currency. What actually happens there will be of interest. Let me just go and see if I can find out the USD INR to actually see. Yeah, so the dollar has strengthened by 1%. We're close to an all-time high on the dollar. We are hitting maybe another 25 basis points for us to move, and we'll be at 88 on the USD INR. Now that has happened because you have seen a 25% tariff put on India, and Donald Trump came out and said that they're going to be putting a penalty on Indian goods because of the amount of Russian oil and Russian equipment that India has been buying. So let's see how that plays out. Like I've been saying, right? Everything's temporary. I don't think anyone should fret over any of these tariff stuff till the time it's not signed and sealed. You never know, the 25 could be a negotiation. The penalty could be a negotiation. You might just see all of this reverse, and you might see a 15% tariff come in a few months later once everyone's negotiating. It might just be that the Indians are hard negotiators and Trump doesn't want to see that happen. So that's exactly why he's trying to do this. But at the moment, the way the market's reacting, you are looking at the USD INR dropping. Let me actually see if I can get hold of the futures market in India, and let's see what's exactly happening. It's about 0.5% lower. So Let's actually see what happens when that market opens again. That should be about tomorrow because that market's shut at this moment. Anyways, Taco. I don't know. I think this is just negotiation. I don't really think that he is. I don't think he's going to keep this penalty on. This penalty is more because the Indians might be negotiating far too hard. Remember, the Indians have a very large non-resident diaspora in the United States. A lot of the large communities there, the second richest community is Indians after Americans there. And a lot of the tech companies out there are being run by, if not Indian citizens, at least guys with Indian like names or native Indians, right? From someone's forefathers or someone were from India. Now you can go all the way on guys working at Apple, Google, Microsoft, Meta, all of these. Some of them, look at Google and Microsoft, Adobe, all of these, they're being run by Indian dudes. So that is going to be an effect that's eventually going to play out. I don't think that it's going to be a 25% plus penalty. He might bring it down to maybe 20 or 15. I actually think he might tag in India at the same rate as what Philippines and Vietnam as well as Indonesia is, which is the 19-20%. So it's pretty much going to be in that range. So I'm not saying it's a taco type of situation, but I think it's more of a, he wants to play hardball with India, and he's basically like, okay, if you guys are not negotiating hard, this is what you're going to pay. Because if he really wanted to tariff India just for the Russia purchases, if you logically think about it, he could have done that even when he came out with that cardboard on obliteration day, right? On April 2nd, he could have come out pretty much and said, right? We got Indian officials right now saying that they're engaged with the US for mutually beneficial deal. So it's kind of more like just talk at this moment. It's just negotiation. If there was a dip in the Indian stock market or anything and it's substantial, I would be a buyer rather than a seller. Again, none of this is financial advice. Not like I am actually going to do it unless and until there is a major drop. So let's actually see how this turns out. That should be it, guys. Anyways, thanks for tuning in. Make sure all of you guys go ahead and subscribe. Let's try seeing if we do the FOMC live as well. Let me get this question. But he's not willing to give India the defense equipment. Yeah, so that's the fun fact. You're not willing to give India the defense equipment, but at the same time, you're not allowing India to buy from Russia. So I guess he wants India to put their arms down and not have military equipment. And I don't know. I mean, at the end of the day, India is going to be self-sufficient in terms of they will buy oil from wherever they have to. They will buy military equipment to whoever sells them and make most of the stuff in-house. What I would say is think on the other way. This might actually be a great scenario for India to start building on their defense, to start building on their oil sector. I would be a buyer in both of those sectors because for the next few years, at least till Trump is in place, India buying a lot from Russia in terms of oil and military equipment will have to be reduced just to maintain this tariff pause. So we're not going to be able to increase our purchases with Russia in terms of oil and military equipment, or we have to deal with penalties. So what I would suspect is it would be logical to look at those sectors as to growth for India, because that would be the easiest place and the place where India would focus the most to try getting the largest amount of capital in place. So that is what I would say is more likely the scenario. The USD INR is what I would spend most of my time looking at to try seeing how much of an effect that would have. At the moment, it's at 87.70, and it does look like maybe in a day or two it could go higher. Now, usually towards the end of the month, the dollar against these currencies start appreciating because a lot of people start who are working in non-INR paying jobs outside India start sending their money back. So there's a lot of INR, let's say INR selling to a certain extent that comes in, and because of which the dollar heads higher as well. So that is an effect that's eventually going to play out as well. But we'll have a look. Let's see how the markets do. Let's see what happens. Remember, 2025, everything is temporary. Nothing is permanent. Everything can change in 20 minutes, 20 hours, or 20 days. Keep in mind. Anyways, thank you for tuning in, guys. Let's see if we can get one done during the FOMC meeting. Thank you so much. Enjoy yourselves.